Seth, I'm ready when you are.
Hey everybody. What's up everybody? How are you today? Good to see you. I am jamming here, Paul. So are you. You just got had a little potty break right before we started there, Paul.
I
came
did.
home with 17 seconds to spare. Look at you go.
I don't have my glasses either. That's okay. I'll survive.
Paul, welcome to the big show. The comments are flying in as always. Paul, people want you to look at some stocks. One of our dear followers, Henry Kirchanen. Yes, Paul, my 7-year-old son, who should be in class right now, is watching us right now. So he's excited. Paul, we sort of preface, we're going to talk about the market, obviously. I'd love to go over some of the questions that our fans and followers have. Obviously, we want to welcome all of you to the channel. I see some comments like this is your first live stream. So we want, obviously, the stock market changes on an hourly, daily basis, and we want to come at you fast. So Paul and I have been doing this for over 2 years now in some form of a podcast discussion about investment, real estate, wealth building, which is a term that Paul doesn't like to use, but really businesses.
That term. Why do you say it?
I don't know. I just maybe it's too cliche, but that's okay. We're not going to use the wealth building term. But regardless, we've interviewed business owners. We've interviewed just a lot of interesting people over the years. This is not a fly-by-night channel we started a few weeks ago. We have been here for a long time, and we will continue to be. So we welcome you. In essence, the run of the show is that I'm a normal guy, most likely like you, and I have Paul in my life to run investment strategies by him. He's been doing this a very, very long time, an owner of upwards of 20 businesses in the past decade and 1,000 units of real estate. He has a holdings group in Akron where our normal studio is, and we go live twice a week, and we bring you videos every single week. So with that said, we just want to welcome you to our channel. If this is your first time, we've been growing at an express rate the last couple months, Paul, and it's been quite exciting. So in general, we do have some great announcements. Stay tuned. We will give out the link to the Patron, which is launching today. Paul was hesitant on this. He's been very adamant that he doesn't need any extra income coming from this channel. But in essence, we want to provide you guys with a more exclusive content, more I would just say
this is definitely a successful push by Seth.
Yeah, I mean, Paul was hemmed up about the money a bit, and I said, it's not always about the money. We can only do so much on a YouTube live stream, and we can only do so much answering your questions. But what we're going to provide with a Patreon is more exclusive access to Paul, his mind, and how he's become so successful over the past 20 years, and you'll gain access to that. So it's a private Discord channel. It's private videos, it's discussions with Paul's, it's uncensored private YouTube forums where Paul and I will get on and talk to you in a more direct manner. And so if you're in a different level of investing that might be searching for more answers from someone like Paul, we're here for you, and we're offering that. That's going to launch today. We will be putting the link right here on the show here in a few minutes. So Paul, right off the bat, obviously it's been a crazy week with COVID and the market. We sort of, the spoiler was that obviously the market's down. What are your thoughts? What are your thoughts on this Thursday with the market, the economy, and how everything's going?
Well, new job report came out today with 40,000 more jobs lost. Now, I want everybody to keep in mind that the last several months have been close to 700,000 to 1 million jobs lost every week. Keep in mind that in 2008 and 9, which was considered the Great Recession, our worst week was 890,000. So this is how bad it is right now. So for me to see stock prices at all-time highs, and before the market crashed in February, the S&P's peak was 3393, and it recently got to 3,600 and some. What was the exact market high? That's not exactly.
Paul, repeat that. Paul, repeat that sentence real quick. Paul, repeat that sentence. I think I muted you on purpose. Restart. Restart real quick.
Where am I? Okay, so
you just fired up the S&P. Tell us about it.
So it's just hard for me. This is the S&P Trust. Let me just look at the actual S&P index right here. So in the last year, we went to a low of 2,200 and a high of 3626, all from an economy that's lost 30% GDP in terms of in a quarter, overall 9%. It's not really adding up to me. It just doesn't. It doesn't make much sense to me. So all in all, I still consider this to be a very expensive market. I always have. I still think the market should sell for around 1,500 to 1,800. Sounds extreme. And then you look at something like the NASDAQ 100 and you see how much that thing has gone up in the last freaking year. I mean, it's doubled in the last year. And this is just since it's from a low of 7,000 here. I mean, this is just crazy. I don't understand this, but again, things can be crazy for a long time. That's why I've started to incorporate more trading into my philosophy. That way I can take advantage of momentum. I'm not here to just sit there and say only fundamentals. I'm now taking options into my investment strategy. So as you guys know, I have businesses, real estate, stocks, now day trading. I don't call it day trading, but trading and options, because I believe you're just an investor. You should be able to understand multiple levels of investment if you want to. There's no such thing as just a real estate guy, just a stock guy. If you understand investing, you should be able to do all of these.
Paul, pull back a bit. You say that you show that chart of since COVID has hit, the market has gone crazy. Why is that crazy? Explain that to a normal person like myself.
Well, again, what's happened since COVID? We've lost 27 million jobs. We've had GDP drop 34% in a quarter. We're not even back to the previous level of GDP high, but yet we've seen a 10% increase from the previous high, which was already overpriced, all driven by low interest rates. It just doesn't add up. I mean, it's like if all of a sudden you lost your job, the government's subsidizing you to stay at home, and your net worth goes up. Does that make sense? No, it doesn't make sense. I mean, you lost your job, you're bleeding through money. I mean, yes, the government's subsidizing you, but should you go back to record high net worth? It just doesn't add up together.
Yeah, I mean, I'm trying to get used to this. Like, why is, in your opinion, normal people? Again, I argue with you about this for things like Tesla. Is like, no, I feel like normal people, the friends I discuss investing with for the past decade or two, with a company like something like Tesla, which we talked about a couple days ago. I frankly don't care about the market, how many cars they sold, what their PE is. All the pillars that we discuss, I really just want to know is if I put money in at X price, I want it to go up so I can make money. But why is everything going up so bad? I see the Tesla fans, every time it goes up, they post on the Tesla forums or Facebook pages, and they're just all like, yeah, this is just going to skyrocket. Why is this growing market in a weird time, maybe somewhat cautious?
In the short run, stocks are going to do whatever they want. They're going to go up, down, left, right. It doesn't matter. They're going to go do whatever they want. But in the long run, it's been proven time and time again that fundamentals matter. What are fundamentals? You're buying a business. It's the cash flow. It's the assets behind the business. It's the revenue. It's the net income. These are the things that matter over the long haul. And the less you pay for revenue and profit and cash flow, the better you will do over a long period of time. And this has been proven through decades and decades of back testing. Look at Warren Buffett. Warren Buffett buys based on I'm buying a business. If I buy one share of a business, I'm also, and by the way, David Spicer, you're right. The S&P is being driven by just a few companies. If you take out those 5 to 10 companies that are driving the S&P is down over recent times. And those companies also happen to be the most expensive ones in the market. So these are the things that people don't, it's hard to understand from the outside coming in, is stocks are going to be driven over the long haul by fundamentals in the company. How's their revenue, profit, cash flow, assets, et cetera, liabilities affecting their ability to grow and do much more. The speculation has been huge in the market for the last 5 years. I've done terrible. I'm okay with that, though. I'm not a guy who gets mad because I missed Tesla or Amazon. I just sit there and say, okay, I missed it. I'll find other deals that do well. But you'll also hear from me, people telling me I got Nordstrom right. I haven't got Nordstrom right. I got CCL right. I haven't gotten it right. Yes, I'm up in my investment, but I care about the companies going to my value based on normal times. That's what I'm investing in.
Yeah, Trader Mo.
Open my window because it's hot as balls in here.
Trader Mo said, Paul, today that Tesla did hit all-time high again, and so I'm sure Trader Mo is a huge buyer of Tesla. Mo, give your opinion on that. No, we're kidding, guys. We've done a lot of anti-Tesla posts just for the simple fact that it's just overly priced due to numbers. And Paul, you definitely catch flack on that because they say that our videos are not aging well. When a year ago we were talking about how Tesla was overinflated, but I think your point is the numbers still tell the truth, and it's not really our job to follow the masses. We want to find those undervalued companies that give us great returns, wouldn't you say?
Yeah, absolutely. But that's why we're going to bring trading into this. And we talk about moving averages, which Mo and I have even modified from.
Keep going, babe.
Mo and I have even modified from our stand. My camera just shut down.
Is it plugged in, babe? Oh, there you go.
It's plugged in and everything. I did everything you wanted me to do. And it's just, anyhow. So
might be a setting.
We're doing these things and it's going great. It's going great for the companies, but I'm ignoring them. Okay. Because I do think that Tesla will have its. Here's my point to it. If Tesla's worth $450 a share and fundamentals don't matter, then why not 10,000? And then somebody would sit there and say, well, 10,000 is ridiculous. Well, why is it ridiculous? If fundamentals don't matter, there's no such thing as ridiculous. Because if you say it's ridiculous, then you all of a sudden care about fundamentals.
What about this comment? What about this comment, Paul? I mean, they believe in the company. You have.
Right. Believe in the company in what? In terms of selling more cars? Well, then fundamentals do matter. The second you say, I believe in the company, then you're sitting there saying, I believe in the fundamentals of the company, because you're sitting there saying, I believe the company will grow a ton. Great. So fundamentals do matter. I agree with you. And my comment is the fundamentals at the current level do not justify anywhere close to this price. It's not like we're off by 10 or 20% where we can grow into it. We're off by 2,000%. The company should be, it needs to be selling 20 times more cars to justify, 30 times more cars to justify this value. The disconnect's too large. I'm okay with disconnect being small. That's why we talk about PEs and price of free cash flow being less than 20, because, hey, we can grow into that. But when it's 800 times earnings, it's hard to grow into that. Has it happened? Sure. I started shorting Amazon at 300 and I got at 1,000. And I do think that Amazon is now worth 700 to 1,000 a share. But where is it selling at right now? 3,200, 3,100? Still a big disconnect.
Yeah, Micah has a great point. And Paul, I was going to tell you, I just text you, make sure every once in a while, if you just touch your screen while you're talking, I'll remind you, just touch your little screen there and it'll keep the camera active. But just all you got to do is just touch your face and it'll just, there we go. Micah brings up an interesting point, Paul. When it all comes down to Tesla is more than a car company. You've been pretty adamant that it's not. I reflected on this yesterday with my wife, Paul, and I was saying, maybe they haven't even started to sell cars. I mean, they are sending people to space. They have a roof. They have solar panels. They have battery.
Tesla. I don't think SpaceX is part of Tesla.
It's not I think it is, Paul. Someone correct us if you're out there. Yeah. David's saying it's possible to be wrong. It's strange to be so wrong by such a large
separate companies.
They are separate
companies. Yeah.
Okay, I see. So,
by the way, if it's not a car company, great. What kind of company is it? Tell me what would be ideal.
Well, Paul, maybe I wonder if the answer is it's just maybe they're just a young company that has a lot of hype around it. Go ahead.
If they're a young company, then you know what the example is?
Go on.
Hey, Michael Jordan just had a baby. We're going to pay that baby $30 million a year to play basketball in 20 years. But wait, it's a baby. Yeah, but it's a young company. Why are you paying it adult money? You sit there and say it's a young company, but it has adult valuation. So their fundamentals matter. That's the thing. It's like I always tell people, I think I'm going to be a billionaire someday. Does that mean that the U.S. government can tax me like I'm a billionaire? I can go spend like I'm a billionaire? No, that's not the way it works. You have to sit there and say, let it actually happen. Let it go to fruition, then we'll pay them. If there's a lot of upside potential, I do agree in paying a premium. But 20 or 30 times premium, I stop there. I go, listen, guys, at that point, if you invest in 100 companies like that, you're going to be wrong. If it's a young company, but it has a mature company valuation, you have a problem there. That's where there's a disconnect. Where you want to find is the other way around. It's a mature company with a young money valuation. It's a $400 billion company that's selling for $30 billion. That's what you want to find. That's very hard to find. But the whole point is, you're exactly right. That's exactly what they're doing. They're treating it like a mature company with value, but they're not letting it actually be a mature company. It's still a small company.
Yeah, Paul, one of my friends in Columbus, a great videographer and filmmaker, Jonah, says, I look at Tesla more of a tech company. What do you think, Paul?
Awesome. Tech company. As a tech company, why doesn't it have the margin of a tech company then?
Say that again.
Let's go look at it. It's a tech company, right?
You're right.
My share screen.
You're right, Paul. I remember this. Go ahead.
Share my screen with me, would you?
Yep.
Okay. Here's Tesla. Gross profit with 7% coming from the government is 23%. So that's really like, call it 16% when you take the money out. Call it 20% to be conservative. Bottom line profit margin of 4%. Okay, big tech company today. Let's go to Apple. 38% and 20% bottom line. Okay, much better than Tesla. Microsoft, 70% gross margin, 38% bottom line. Okay, let's go to Amazon. This is about the only one that can come close. 25 and 7. It's still better than Tesla. So if it's a tech company, where are the tech margins then? All we're doing there when we say it's a tech company is we're trying to justify the high valuation because we all want to sit there and say, no, it's right. It's okay. If it's a tech company, then it should have the margins of a tech company. It doesn't though. Where's the revenue? Tech company, Amazon, 350 billion. Tech company, Microsoft, 147 billion. Tech company, Apple, 275 billion. Tech company, Tesla, 28 billion. Come on. Where's the tech level here? Just because they make something in technology, every company, GE makes technology. You consider that a tech company? Come on, give me a break. That's a cop out.
Sorry, Jonah. Yeah. Okay, Paul. Well, listen, while you're on that topic, we wouldn't want to digress right into Tesla, but Tesla's taking over the news because they're hitting the S&P. People have asked, if a big overpriced company hits the S&P like that, and every person who buys SPY, ETF is buying, whether they like it or not, is buying a small portion of Tesla. How is that going to, if we keep putting overvalued companies in the S&P, how is that going to change the stability of it? There's a lot to take in. But with that said, you've definitely had a couple of people asking about Bitcoin, which has been in the news of late. Now, Paul, if you guys look back in the shows, which you may not, but Bitcoin has been a large talking point for us for a while. I called Paul, I believe this was like around Christmas 2017, with this radical new idea about Bitcoin and how I was buying it and how I believed in it, how it was incredible, it was the best thing ever, and I had friends saying this thing is going. You read all the articles. By 2021, this is going to $1 million. Touch your screen, Paul. This is going to $1 million. $1 million a coin. I had about 3 coins, and I sold my coins on the show within the last, I don't know, maybe 6 months, when I was basically back in the green. But I made a good amount of money off Bitcoin, Paul. But people are asking, and without getting all fired up, please tell us. And Gio owned a Bitcoin too.
That's what I do, Seth. I get fired up. And
okay,
so let's talk about Bitcoin.
Please
Bitcoin's
do.
a great thing.
Go ahead.
Bitcoin's a great thing to trade. But when you sit there and talk about Bitcoin, you remember, guys, how many different digital currencies came out? It's funny. Look at my buddy's group chat, and Mason's here right now. He's in this thing. They talked about Ethereum, whatever, all the Ethereum, whatever, all the. Now do we talk about them anymore? We don't.
I had friends, Paul. Yeah, I had friends literally calling me like, "There's a new one tonight. Everyone's going nuts. Go buy all this, and there's going to be a big sell-off tomorrow." Yada yada. Like in the hype of it, which we're going now back a year, where it went up to $20,000 a coin, then back down to like, oh my God, Paul, 5,000 or 6,000. Now what's it up nowadays? 17,000, 18,000. It's almost reaching record highs again.
Now again, Facebook was creating its own digital currency. At the end of the day, I'm telling people, would I rather rely on something that has value based on people's perceived value or the US government and government backing? Obviously, it depends on the government. But look at this, guys. I remember teaching at my high school at Walsh, and when it was literally going up like this, and then look how far back it went, and then it goes back up again. You're telling me that the value of a coin dropped by 75% in 1 year? If that happened to the US currency, you know how bad we'd have it right now in the US? It'd be terrible. And the world would be terrible. I'd rather you buy Magic the Gathering cards and baseball cards as your form of currency than this. Because at least they have rarity and there would be some market for it. People want to buy and sell it. This is just all digital. This is all just like numbers on a screen. You might sit there and say, what's the difference between that and the current dollar? Great. At least the current dollar has the power and backing of the US and the US government and the people of the US who value it. Right? I mean, I look at it going, if you're trying to trade this, more power to you. Trade it with technicals, look at momentum, all that, more power to you. But if you think this is the future, I mean, maybe I'm wrong, but I don't think that's the case. And I think Warren Buffett agrees with that. And all the billionaires who are making money on it now aren't making money on it because they think it's the future. They're just trading it. That's it.
Yeah, Paul, there's a Bitcoin stock. It's BTC. Look that one up. That was like, what was this? If anyone remembers what this is, you don't see was it
Here's Bitcoin price.
There's a QBTC stock or some sort of.
Well, Dave is saying that BTC is at 23,594 right now.
Yeah, what is that? I'm
seeing $18,039.
Bitcoin stock.
That's as of 6 minutes ago. Maybe I'm wrong, but either way, that's what's great about bad times for me. I find other ways to make money. I'm going to add Bitcoin to my trading. I'm going to look at Bitcoin and say, hey, should I trade this thing? But I'm not going to look at it as when it comes to trading, I don't care what the fundamentals are. I'm trading ticker prices. When it comes to fundamental value investing and buying a business, I care what's behind the company. I care about the fundamentals. I care about what they do, because I really do. And the great news is you have somebody here who's acknowledging there are multiple ways to make money. There are multiple ways to skin a cat. That's all I'm sitting there saying. But if you talk about it's the future, pump the brakes. If you tell me Tesla's is a tech company, pump the brakes. If you tell me they're more than a car company, then you don't understand financials. You don't understand. You're not comparing the right thing. And that's fine, but let's call a spade a spade.
Paul, make sure you touch your screen every once in a while. Let's get back to how about this one, Paul? We can switch from Bitcoins to gold coins. What do you think about gold? People are asking about gold and silver. Now, you definitely are a much bigger fan of these of gold and gold, right? I mean, what are your thoughts on investing in things like that? And inform us, a normal person, about how the market works with the value of the dollar versus the value of gold and what you've seen.
So I have gold. I own some gold ETFs. A good friend of mine, Michael, has been talking to me about gold for a while now. The cost to manufacture, refine the gold, do the whole process is much lower than what the current price is. And I think right now the only reason people aren't in gold is because stocks have been so high. Now, the one confusing thing to me is gold has now gone up to $1,900 an ounce. I think it was at $22,050 at one point because stocks were down, and it's gone down just slightly since stocks rebounded. Once there is a pullback in stocks, I think gold will become very popular. Especially with fear of inflation, gold become a very popular asset to own. I like gold long term. I have some of it. I have a few, like I said, ETFs about it. I've not bought gold directly. And here's an example. I can't understand how to value gold, so I choose to buy the ETFs attached with the companies that make the gold. That go out there and mine it and do everything. That's what I choose to do, which is exactly what I tell you guys. If you don't understand how to specifically value specific companies, but you like a certain industry, go buy the ETF in that industry. Go lock that down.
All right, Paul, I think it's time. Should we give them the Patreon news?
All right, guys. So per Seth's pushing and plotting, we decided to open a Patreon. Now, the reason to do this is we want to make the app. And I want to make sure I have demand for the app before I go spend $100,000 or more to build it, which is what it's going to cost. This channel costs me a lot of money to operate every year. Now, that's not your business, but at the same point, I want to give more to you. I want to be able to have people comment on YouTube all the time for me. I try to answer as much as I can. I do a good job, but there's more specific questions people ask me that I just can't get to because they're asking me for analysis that it's just going to take too long for me to sit there and answer every question. So Seth was like, Paul, you keep wanting to provide more, but you're not giving people an outlet to provide more. Seth and I have great conversations that aren't exactly appropriate for YouTube Live that we want to be able to give you guys in Discord. So we've created this Patreon. It's going to allow us to do a few things. One, get the app going. Two, I want to be able to provide education for free. I'm lurking right now on trying to get a job at a local university to teach this class for free because I like teaching so much. But at the same point, I want to be able to have Seth and Don do better. So we've offered this. It'll be early access to the app. When I say that, you'll get a much discounted rate on the app forever. You won't have to pay the $15, $20, $25 the app will be. And it allows you to get in, and then also allows more access. And then more importantly, I want these so I'm a big value investor. There are value investing groups that I belong to, value investing forums. We're very big on sharing information because in investing, sharing information is very important. So we're doing this. I get awkward about the money because I don't like asking people for money. It's not asking for money. What it's saying is, do you want more access to me? If the answer is yes, if you want more access to our community, the answer is yes. This gets you the app at a much cheaper price in the future and allows you to do this. So anyways, that's it. Let me know. Seth, you go plug away.
Yeah, I mean, I pulled up. I basically pulled up the Patreon page and the memberships that we're gonna have. We're going to add more to this. On the Patreon, it doesn't actually. Social Dancers is asking about the app. The app, Paul, give us an update on the app and what that is, real quick.
So the app, like I said, I keep saying it's 9 to 12 months away, but it's going very well. Our developer, Dima, is our best developer. He's very enthused about it. All levels of the membership get you access to the app, all levels. The question is, on the 2 upper levels, do you want more access to me? I will be very active on a weekly and monthly basis, depending on which level you're in, but you'll have constant access with your group of investors. But the app is going great. I think it's going to be very good. And the great news is, whatever our first, I want to make sure that I have a dedicated developer on the app. That way we're constantly making it better. The data feed alone is over $30,000 per year just to have the data feed. So the app, Seth told me not to talk about money, but I want to talk about it. This channel costs me about $100,000 a year as is. Sorry. Yeah, about $100,000 a year as is to have. Adding the app to it would probably take it closer to $200,000 a year. I just want to make sure I'm not losing my butt on it. And, my business partners to answer to, and they say, Paul, you're not making any money off this thing. What is going on? So that's what I'm trying to do here, is make money to pay for it. But this app and channel will cost me about $16,000 a month to have. So I'm trying to give it as an opportunity for everybody to be able to get into it at a much lower price.
Yeah, so Paul, people are asking about the different levels. So the initial level, guys, let me explain. For all 3 levels, when the app comes out, you will get early exclusive access to our 8-pillar app. What this will do, and Paul has developed an app before that is flawless. If you go to dynastyowners.com, one of Paul's many companies, we've developed a fantasy football app. Again, guys, if you haven't heard this before, Paul has so many other outlets. He spends a lot of time on this other outlet. Dynasty Owner has thousands of users, and we're looking to grow. But when the app comes out, it'll be the 8-pillar analysis that we've been bringing you for months. We talk about PE ratio, profit margin, revenue, profit growth, number of shares, assets over liabilities, free cash flow. All of this will be quickly determined using an app that Paul's developed. People have asked for it. How can we get this quicker? So you at home can analyze particular stocks to find, again, those maybe under the radar stocks that can get you big profits. So that's going to be part of all 3 levels of the Patreon is access to the app when it comes out. And Paul, are you thinking 6 months, at least 6 months for the app?
Like I said, I'm saying 9 to 12 months. It is a while, but we want the app to be good. The other thing is, everybody keeps asking about my Excel sheets. My goal is the app is something I use. I don't just want an app for you guys. The app is something that I want to use. So I'm going to make it good for me to be able to do what I need to do. And that involves 8 pillars. The 8 pillars were not just created out of nothing. The 8 pillars were literally Seth saying, Paul, how do you look at a stock? And I go, well, I look at these things. Well, how many are there? 1, 2, 3, 4, 5, 6, 7, 8. And Seth claims that he's the one that came with the pillars. We won't get into that conversation yet right now, but he came up with 8 pillars. And these are the things I use. Nothing I tell you guys is something I don't do. It's full disclosure on how I look at things. Now, the 10Ks, people have asked about the 10Ks. I will figure out a way to get the 10Ks on the app, but that's going to involve hours of reading per 10K. I don't want to do that. But all the trading ideas I have, I'm going to put them on the app, all the assets, etc.
Yeah, I do believe momentum will be a huge part of the app as well, Paul, at least access to momentum in our quote-unquote ninth pillar. But regardless, guys, the second level, again, we're going to be adding to these levels. The second level will give you direct access to Paul's portfolio. We've gone over it in the past, but you will have weekly sort of knowledge of what he's putting his money into. And like I said, if you were on the show on Tuesday, Paul, you and I bought a little bit of InMode stock. And a little bit for me was about $4,000, and a little bit for Paul was $35,000. So we're talking about real transactions that you'll be able to see. Again, Paul, it just bugs me when I watch some other shows on YouTube and people say they're putting more money in. We actually do it on the air and show you guys that we're serious. And so this will include all the Discord benefits, and we'll also have we're going to be adding stuff to this like the Paul and Seth nightly show. It will be an invite-only private YouTube live stream where we'll take your questions, and that'll be for the middle section. The upper section will basically be direct access to Paul with the Discord. So, and
by the way, I want to make note.
Go ahead, Paul.
People are asking about the Excel sheet. How do let me show the Excel sheet real quick.
Go ahead.
Sethi, is that okay?
Yeah, please do.
Okay, let's see here. Stop sharing, share screen, application window, share. All right, is it sharing? Is it live?
Go ahead.
Okay, guys, so this Excel sheet is done from a data feed that I pay for through Y charts. That's why I'm paying the big money to bring it through Morningstar and get the actual data feed so I can create this again for you. Here are the inputs I'm going to allow you guys to put in. I'm not going to get into what these are right now, but it spits out values to me of what I'm willing to pay for the price for the stock. Here's the 8 pillars. This is a very rough and tumble kind of way of looking at things, but it gives me my price of free cash flow. Everything I look at, I'm going to make this nice and pretty on the app for everybody. Now, at the end of the day, this is just reliant on this data. Like, watch it change. If I change this.
Slow down a bit, Paul. What are you changing?
I'm just changing all my inputs, and look at how it changed the pricing.
Okay.
So I'm just sitting there saying, for you guys, everything about investing is based on assumptions. And that's what I want to be able to provide you guys, is an ability to put your own assumptions in there. And that's a big thing. So that will be available through the app at some point.
Yeah, Paul. It was nice for you to talk about. We really want people to know that, you know, if you've been following with our channel, we definitely get comments like, I can't take Paul's light, or they changed the studio and Paul's lighting. Guys, we're working very hard on this channel. As Paul said, I'm a paid employee of Paul to do this show. Don, our producer, is a paid employee of the Crossroads Group to do this show. Paul has been just throwing money at this show for multiple years, but we're very committed at it. So, you know, I would say this is our chance to sort of give back a little bit. We welcome your support. And we appreciate the support you guys have given us. But obviously, all the beautiful cameras and all the stuff we try to provide you, the Y charts data and all that, definitely cost Paul money. It hasn't costed me too much, Paul. I appreciate that. But
you've made a few bucks, but that's okay. I still want to pay you more.
I appreciate that. So the Patreon is there. It's up and running. If you have questions, you can certainly ask us through that. The Discord channel that's on there will now be a major portion of Paul's life. And I'll be on for comic relief, not so much in terms of. And someone asked, does any websites allow data pulling for free, Paul? Do you know about this?
No, not the data pull we want, guys. That's the thing. It's when you realize the data pull you have and how good it is, you charge big bucks for it. So, you know, there are websites that do it, like Seeking Alpha and Yahoo Finance. Yahoo Finance used to offer it for free and not anymore because they realize how valuable it is. But the other thing is, the free ones, if there are free ones, they're probably very limited in history and not reliable. Morningstar has a team that is constantly verifying the data integrity, and that's what I wanted. I want to have as limited possible number of people, you know, having errors on there. I want people to come to me and be like, oh, there will be errors. I find errors in Y charts a few times a year, several times. In fact, I found one recently on the live stream. I found an error and I notified them. They said, oh, thank you. You're right. And they went and fixed it. So these things happen.
What are you, people are asking about what's going to be on the Discord, Paul. What are you envisioning for the different tiers?
So the first tier, the bottom, the OG tier, that's just for everybody to talk to each other, have a good time. It's 500 people, share your ideas, etc. I'm gonna be active with the beard one, Seth's beard, and the Paul Super Shorts one, where I'll be active on weekly, monthly basis. I'm not going to guarantee. I'm not going to guarantee too much because I want to. But remember, I like talking investing, and you guys have given me good ideas for investing, so I want to really engage that whole thing and get it going.
Yeah, guys, if you follow along, Paul takes even YouTube comments, basically like their text. Paul, you have YouTube comments set to hit your phone immediately. Sometimes I will try and beat this man to like thanking someone or answer a question for some of your YouTube comments on the show. And this guy, all Paul, it seems like 11 o'clock at night when you're lounging in bed with the dogs, watching football, you are answering YouTube comments and talking investing. So
I do enjoy it.
Yeah. So yeah, the everything is live now, folks. If you want to go to the Patron, if you've been wondering about it, it's there, and we will start interacting with you more. And we certainly appreciate your support, Paul. I think some people want to get in on some questions.
Let's do it.
Oh, Projesh is saying you can't pay with credit card. We might have to. And not working correctly. Here we go. And of course, here come the Paul. Here come the problems already. And not working, charging tax, yada yada yada. We will get on that, guys. We will figure that out after this.
I don't charge the tax. It's Patreon that does that.
And when will the weekly? Zachary says, when will the weekly Discord start? Now. I mean, right? We're gonna start interacting. Yep. So.
I just said hi to our first person.
Oh, how nice.
Cooker 007 is our first person. I don't know who that is, but
and of course David S. Spicer is on. So okay, Paul, let's do this. People have asking about Square. Would you like to take the 8-pillar analysis and look at a company like Square, please?
Yeah, let's do it.
All right, here we go, guys. This is what you're here for.
Share my screen, my friend.
Here we go. Get after it. Here we go.
Okay, so Square, $86 billion company, right? So if you want to buy the entire company, not just look at it as a stock, you have to look at it as buying the entire company. You're going to pay $86 billion for it. Okay, PE.
Pillar number one is PE ratio.
Oh boy, what is this? 303, already an X, right? We already have an X for it.
Huge
Not
X.
even an I.
Yeah.
Profit margin 1.2%. Now this is probably because they're a growing company. They're probably spending a lot of money to grow, so they're probably losing money hand over fist. Gross profit of 26%. So we have 2 X's so far. PE of 300.
Keep going, Paul.
And profit margin of 1%. So right now, that's the way it is. Let's look at their financials. Annual financials. Now look at this growth, guys. 2012, 203 million, all the way up to 4.7 billion. Big fat check mark here. Huge growth. In the last 5 years, 1.2. So they're up 4 times. They've had almost 4 times growth in the last 5 years.
How about profit growth, Paul? Pillar number 4.
Okay, negative 180 million to a positive 375 last year. That's pretty solid. So they have definite profit growth. Now, the one thing I'm going to look at is let's look at their quarterly numbers, because look at this, guys. Look at this monster growth. It's 2.5 times larger than the same quarter last year. This is September. This is the quarter ending September 2020. They did $3 billion and they made 36 million. In the same quarter last year, they did 1.3 billion in revenue, and they did 30 million in profits. So the profit's not up as much as the revenue, but it's still profit growth even overall there. So definitely a check mark there.
Revenue and profit are looking good. Mark. Yep. How about pillar number 5 is number of shares outstanding. We want this number going down, folks. We want them to be buying back shares, not selling them to do things.
This is bad. 170 million shares.
Wow,
for 25.
Paul.
So
Have we ever seen a company that's tripled their share count?
No, I don't think we have. This isn't quite tripling, but it's pretty close. This is 2.5 times. This is 2.5 times. So guys, what this means now is if there were 10 shares outstanding before and you owned 1, you own 10% of the business, right? Now that same company has 25 shares outstanding. You still own 1 share. You own 4% of the business. You went from 10% to 4% of the business. This is bad. This alone would almost be reason enough for me to say I'm out, because I have to sit there and understand. I'm sure they made acquisitions along the way, but this is a tough one to swallow. They've had nothing. They were decreasing their shares and skyrocketed. I'm not going to say I'm out, but they doubled their shares in 1 year. That's a tough one. So it's a big fat X. Let's go to the balance sheet.
Let's look at pillar number 6, which is current assets greater than current liabilities. Paul, you correct me. This is not overall assets over liabilities. It's just the current.
Nope. Correct. It's
Can you blow your screen up just a bit to give us the last 5 years?
That's what I have.
Oh, sorry. Go ahead. Sorry.
Just the last 5 years?
Oh, just there you go. They're just a little bigger so we can see what's going on. There you go, Paul. Keep going.
Okay. So total current assets, 6.5 billion. Total current liabilities, 3.8. So they're good there. They're plenty good. In fact, they have, look at that. They have more cash on hand than liabilities total. So multiple check marks there. This is very good. It's very hard for companies who have more cash on hand than total liabilities to go bankrupt. So that's the good news. The question still becomes, is it too expensive? Which I can already tell it is. Let's go to free cash flow. Let's see what the free cash flow looks like.
Before you hit that, Paul, this is interesting. Crafty, who is a great follow of ours, said it's overbought, but they believe in the company. Crafty, will you let us know? I say this, Paul. I'd love to hear. Oh, the tech. Okay, the tech and what they do, Paul. How much should believe? Talk about this, because I mean, this is a big term for Tesla, for NEO stockholders, for growing companies like Raytheon or something. How much does belief in a company sway? I know the answer. Sway your evaluation, and how much should it be swaying mine as a normal person?
That's a great question. You have to believe that the company, from a qualitative perspective, can keep doing what you expect it to do. What does that mean exactly? Whatever your hypothesis is on what the value of the company is, that's important. But here, that's where we look at Tesla, we look at Square. Are they valued at a price that even if you believe in them, it would take them years and years and years and years and everything going well to justify? That is the whole question in investing. That's the entire question. That's where I sit there and we have the disconnect with investing. People think great company, great story, go pay whatever. But you still have to believe they can actually hit those targets and do the things you need to do. So even if it's every company I buy in, I believe in, but I believe in it at that price. The lower the price it is, the less I have to believe in it, essentially, right? I just have to believe they're going to just do okay. If a company's selling for 5 times free cash flow, my comment is just stay the same. I don't care. Just stay the same and I'll make a lot of money. I'll make 20% a year. So it's all, but the thing is, the more expensive it is, your belief has to be insane and it has to actually hit. That's the thing that's really important.
So you, Paul, if no one was watching, you're basically teaching me, because I had that thought process about Tesla. I don't know why, but I had that interesting thought process about Bitcoin. Just for some reason, the belief, I hear people saying that. And so I guess, but at the end of the day, belief or not, when Tesla goes down and I lose money, I start non-believing. But again, it's just interesting. I think Tesla still has a ton of room to grow. You're just saying, let's not pay for that growth right now. Am I correct?
Let them earn the growth. Let them get out there, let them grow, let them do what they're supposed to do. And by all means, pay for it down the road.
It seems like we have some people already joining the Patron. That's incredible. We can't thank you enough, guys. It's incredible. You will get more access to us. I have tickled the idea of sharing my portfolio with real numbers. If you want to see what a normal person is investing in and where my numbers are, I'm not shy in doing this. I don't have a ton of money saved up. Upwards around $300,000. Again, I'm going on 40, and Paul has taught me how that's a pretty good amount, Paul. Right? I mean, that's gonna. Just a normal return should give me a nice retirement. And there's a lot of room to build on this over the next 30 years. So,
yeah. So to answer, put up Daniel's question, can you give a fair value for Square? Or is this not a buy because the share is outstanding? So I'm gonna put. I mean, it's gonna scare you with them. So the free cash flow is there. That's the good news. I mean,
we never finished. Okay, Paul, do you want to finish the 8 pillars? Let's go back to the charts here.
I do want to finish.
All right, this is pillar number 7, guys. Free cash flow growth over the past 5 years. We're gonna get an average of this.
Okay, so Seth,
I'm ready.
Here's what I want to do. I don't want to look at the last 5 years because I want to focus on these last 2 years. I want to focus on the last 2 years have done 230 and 400 million. So they're growing their free cash flow by an insane amount. Now let's see how they did the last 12 months. The last 12 months, they've done 220 million in free cash flow. So guys, I'm looking at that going, let's say I mean, you're not going to like my number. My number is insanely low.
Go ahead, Paul.
Like, I'm literally looking at this company thinking to myself, $20 a share, especially with the dilution. I mean, it's an insane amount. It's got to drop so much for me to be interested because they're it's super expensive and they're diluting the heck out of everybody. That's a problem.
Paul, let's answer this
That's
question
real big
from
problem.
Anne, the social dancers in Canada. She says, if Square's doing so well, why would they need to be diluting shares? Does anyone know? Did they buy something or?
They probably bought something because their shares like doubled in 1 year. They probably bought something in 2000 and let's see when this happened. They bought something between 15 and 16.
Mm-hmm.
At some point in 16, they bought something. I don't know what it was. What did Square? Let's go look it up.
Now, Paul, I would say is I'm always intrigued in companies. I'm always intrigued in companies that really catch on. We talked about what's the top flight is the golf and how Top Flight was being bought by Callaway. Like Square, it seems to be just like the payment collection app that everyone's kind of got on board with. I've been using it for years, but Paul, wouldn't you agree? It's more common to walk into a coffee shop or something and see that Square reader. I mean, a lot of people are using this, and it seems like they've kind of won.
Square is great.
Yeah, Square's great. Yeah, right. So, I mean, you want to share your screen? Keep going, Paul. What do you think?
Like I said, I still think it's a very inexpensive. It's a very low price company. I mean, even if they weren't increasing their shares, it's still at most probably it's just a hard one, guys. I don't want to sound like Debbie Downer, but it's a hard stock. I mean, $30 to $40, pay double for the growth. I don't know. I mean, that seems to be. I do think they're going to be a disruptor. I would just sit there and say, from this standpoint, I'm not touching it. I have to wait for it to drop a lot. Now, the good news is, you look here, and maybe it was a time to buy down here. I mean, this has just gone up 4 times in the last 8 months, 9 months. This is insane. If you want to look at the technicals, the 100 versus 300, I mean, look at where it crossed right here. It crossed here in May of right here at $80. And look at it now. It's at $180 some dollars. You would have over doubled your money. It's crazy. It's insane.
Paul,
it's awesome. Good for them. And I love the company, by the way. I absolutely love Square. We use Square. We love it. It's very easy. They're expensive, but they're very easy to get in touch with and get rolling. But again, just too expensive. So let's pump the brakes and wait for things to simmer down.
Paul, Daniel, I don't know who this guy is. Do you know Daniel? He's awesome. Thanks for commenting. It's great. Daniel says, what about REITs? Paul, have you done any more homework on REITs? I know you try to stay away from them a bit. What do you think about REITs?
With REITs, guys, it's just, I don't look at REITs because I just buy my own real estate. If you want to get access to real estate, it might be a good idea. I do think that REITs take a little more investigating more of the 10Ks than just looking for the 500 foot view that we do here on Y charts. It takes a lot more investigation to understand what are their assets, what's their depreciation, because depreciation is a big thing in real estate. It can affect the books and the financials when it's not really a bad thing. You know what I mean? Like in normal depreciation for a business, they spend money. But in real estate, you can buy a piece of real estate, never, ever, ever invest back into it, and you still get depreciation. So real REITs require more investigation for me to really get involved with, and that's going to take a lot more time. That might be something I do in the Super Shorts channel, but and like a whole video kind of series of talking about REITs. But for right now, in this, I don't think it's really the best use of my time.
Paul, what about Zoom? Remember we looked at Zoom many months ago. What about just open Zoom back up real quick? This is off the request line. This is a pretty obvious one. I mean, it was going crazy as COVID hit and ramped up, and I'd love to see where it's at now.
Zoom diggity. Wow. Oh wow, look at this, guys. It's fallen a lot since October. It was at 570 in October, and look at it now. So if I told you in October when it was 570 that it would fall 30%, what would you have thought?
Absolutely not. It's going to keep growing. COVID. I mean, right? They always go up, right, Paul?
And look at that. It's down. It's down literally. So let's do that. Calculate 418 divided by 568. It's down 27% since October. I mean, guys, these things do happen. You got to remember that. The only thing is you've only been witnessing this major market boom. So in your head, you're like, no, these things don't go down. They do go down. You just got to be patient. So look at this, guys. Price to sales ratio. Now, this is what this does. It takes the price of the company divided by the sales of the company. Do you see this 92 right here? Yeah,
what is that?
That means for every dollar of sales, you got to pay $92 for the company. Let's go look at Apple. 7.5.
What does that
Look at
mean, Paul?
Microsoft.
Well, just back off it. What do those two numbers mean in that
It means
comparison?
for every dollar of sale, it's the ratio of the market cap divided by the sales per year. So it's kind of a way of saying, hey, how much are you paying for every dollar of revenue, of sales, of which is revenue? 91 times for Zoom. Microsoft's 11 times. Apple's 7.5 times. Google is 7.4 times. It's just another metric. Look at Ford. Ford is even worse. Ford is 0.26. That means for every dollar of revenue, you pay 26 cents to own that dollar of revenue. So Square is currently 360 times more expensive in terms of price to sales than Ford. I'm not saying it should be at 0.26 like Ford. Car manufacturers tend to be a lot lower price to sales ratio. But if you look at things like Microsoft, let's look at Visa, another company that does credit cards. They're 21 times right now. And I'm quite sure they're probably expensive. So do you see what I'm saying? It's 4 times more expensive than Zoom. Oh, sorry. We're talking about Zoom here.
Yeah, Zoom.
We're talking about Zoom here. But either way, it's still very expensive. I wonder what Square's was. Square was 12 times. Oh, so about where Visa is. Probably too expensive. No, less than Visa, actually. So go to Zoom, $120 billion company. Look at this PE ratio, Seth.
Holy cow, 536.
Yeah,
Still
it's insane, guys.
What was it? What was it? I mean, you can't really tell, but what was it at its height? I mean, we must be talking 700-800 back in the day.
Well, these are the PE ratios for. It's been pretty high this entire time.
Wow, incredible.
It's actually lowest it's ever been right now, pretty much. No, got here early in August. It was pretty low. Got to 300 some. Either way, guys, this is a very, very difficult company. Let's look at their financials. Let's just skip to their financials in terms of looking overall. Massive growth. Look at this. It's up 10 times in the last, and I bet you quarterly. Look at the quarterly numbers. Look at that, guys. Look at this. All of last year, they did $623 million in revenue. This last quarter, they did $663 million in revenue. In the last quarter, I did July. I mean, this is a fast-growing company. They made a lot of money. They've made a lot of money, and they've been a pretty decently profitable company for the last for a while now. And sorry, in terms of actually having profit, but it's still too much money. It's still too expensive. That's the problem we have. Still way too expensive. Again, my philosophy is I'll wait for it to stop being the big hype, stop being the big thing, and let it get back to reality. I mean, look at it, guys. It's up 7 times this year still after falling 30%. That's just crazy. Now let's go look at the technicals. So it doesn't have much of a history, but it is above the 300-day moving average. We want to buy them when they're just crossing the 300-day moving average. So this is one I would avoid right now, but it has momentum. But I think it's going to start dipping here soon because of this fall. This will start getting exaggerated a little bit more in the technicals. So that's why I think about Zoom. I think it's a void. It's too expensive, but that's the way I always think about it.
Paul, what about someone asked about someone who asked on Tuesday is back the company ACI stock ACL.
Hang on a second. Let me do something here.
Go ahead, Paul. And Moot Hoot Finance. Someone else is asking. We'll get to some of these. Guys, you're also asking about BKNG stock, MMC, Immersive Electronic. We'll get to some of these for sure.
Okay, good.
What you doing, Paul?
I just want to make sure that my Discord kept popping up, and I know it just keeps popping up on the screen.
Oh, I see. So you're just hiding that. Okay.
Yeah, I'm just hiding that.
Yeah,
and Discord's going great, guys. The Discord's going great. You guys are being very active, which I love.
Yeah, JJ Tolson asked, what about Nordstrom? We can get to some of these. Paul, let's look at ACI, which is Albertsons Grocery Store.
ACI.
Yeah.
Okay. Albertsons. So grocery stores that have very low margins. There it is. So it's definitely going to be. So PE, very low, 8.2.
So far, so good?
Low. Yeah, check mark there. Margin, this doesn't bother me, guys. Grocery stores have very, very low margins. If you'd asked me ahead of time, what's the grocery store's margin? I would have said 1 to 2%. And look where it falls right here. 1 to 2%. Grocery stores have notoriously a very low margin. Now, dividend here. So let's go look at the profit margin by quarter over history. Because they lost money for a while there. But look, the highest one's 2.77. They're a very new company. They just recently went public, I guess. So they're a $7.5 billion company paying a 2.5% dividend. That means every year they owe 2.5% of $7.5 billion, which is $190 million. Call it $200 million a year. Correct, David Spicer. Very low margins, high volume. That is the game of grocery stores. It's never not been that way. Just accept the fact that you're getting 1 to 2% margin. Now, let's go to the financials. Revenue growth.
This is pillar number 3, revenue growth over the past 5 years.
Okay. So clearly they made some acquisitions here early on. So let's go to the last 5 years. 58.7, 59.7, 60, 60.5, 62.4. Check mark there, Uncle Seth. Not big growth. That's expected, but not big growth. Net income. You ready?
Yeah, income. This is profit growth is pillar number 4. Keep going. Sorry, I was distracted by some of the comments, Paul. Keep going.
Okay, loss of 500 million. Loss of 400 million, loss of 46 million, loss of 130 million, loss of 477. I mean, gain. I'm sorry, these are all gains. Big check mark here. Look at this massive turnaround, $1 billion turnaround in the last 5 years. Excellent. They probably made some acquisitions. They probably had some charges on there. So that's probably the reason why. Shares outstanding.
Pillar number 5, shares outstanding. Keep going, Paul.
Exactly the same number of shares outstanding.
That's nice, right?
Is this a foreign company? It's not. Idaho. Yeah, that's great. Good for them.
Awesome.
Balance sheet.
Yeah, this is current assets. Go ahead, Paul. Current assets over liabilities.
My guess is it's going to be a negative number. Let's look. So total current assets, 7.6 billion. Total current liability, 6.7.
Wow.
Over $1 billion in difference. That's good. Because I thought grocery stores would have a lot of inventory, but would have a lot of payables on this inventory. I thought that would be the case. It's since they have such low margin, they got to float some things, but that's good. They have enough money to manage it.
Make sure you're touching your screen there, Paul. And folks, make sure you guys are smashing that like button. You guys are doing great, hitting the like. It's incredible, Paul. 72 likes already, Paul. I think, we have, oh my God, Paul, it's 5-2.
And we're going to go longer, especially because of Patreon and how everybody's been supportive. It's going great.
Okay, yes, Caesar is asking about the Patreon, guys. It's just patreon.com/everythingmoney. We will put it in a comment below. Madon, if you're listening, maybe you can pin it to one of the top comments. We'll keep putting it in, guys. You're doing great. Just look around a bit. It's there. Or just search Everything Money on Patreon. We can't thank you enough for the support. We've been working on this to build this over the last probably 2 months, Paul, getting this where it needs to be. So,
basically.
Yeah. And, Paul, they want you to do some sort of hip thrusting dance at 100 likes today, so we'll get to that as well. Okay. Did we do free? We just did current
cash flow right now. Let's do free cash flow.
Let's do free cash flow. Yep. Great job, Paul.
All right. This is gonna be a rough one. Let's see here. I'm gonna. So Seth, you ready with your calculator?
I am ready. Go ahead.
Negative 50.
A
positive 400. Negative 500.
Oh my gosh, Paul. Okay.
A positive 300. And a positive 425.
Yeah, God, I came up with 575. Divided by 5. 115, of course.
Times 20.
2,300.
Now, here's what I'll say, guys. I'm going to ignore, I look at this going, now this is what I'm going to say. I'm not a no on Albertson. I'm not 100% yes. But if you look here, this cash flow is very inconsistent. I want to understand they're going to be a very, very high capital intensive business. They're going to be constantly putting money in their store. So you got to remember that their free cash flow is going to be very, very low. I think it's very important that you understand why their cash flow has been so inconsistent over the last 5 years. Okay? This is not a no for me. I would sit there and probably put a value. I mean, first off, they can afford the dividend, but not by much, but they can afford it. The good news is if you look at these prices, I mean, this is a very tight range of pricing. Man, look at this. Oh, they just went public recently, literally in June. Oh, I didn't realize that. Okay, so I'm not against the stock, guys. It's a low PE. That free cash flow is a little misleading, I think. I think it's better than it actually seems.
Mm-hmm.
But I would sit there and say, based on last year, let's see how the last 12 months have done. Let's include Oh, wow.
Tell me.
Guys, in the last 12 months, they've made $2 billion in free cash flow. Oh, wow. Oh, wow. What do we do here? Let's think. What do we do here? Because I'm wondering how much of it has to do with the shutdown. People just buying from stores. Let's go to their income statement. Let's go to quarterly. No, it's not up that much. That's incredible.
Paul, I love talking
there's
about
it.
I love talking about companies that no one's ever heard of. They're definitely, trying to find I just love talking about companies that I've never heard of.
Yeah. So here's the deal, guys. Look at this. This is interesting. This was when COVID hit. Their quarter ended right when COVID hit. They had free cash flow that quarter of 120 million, 125 million. The very next quarter, mid-COVID, they had free cash flow of 1.6 billion.
Highlight that, Paul. Where are you at?
2 billion minus 400 million.
Okay, got it.
That's misleading because it's too high. It's probably because people were home so much they had to go to the grocery stores. They had to buy from the grocery stores. There were restaurants were all shut down, etc. The next quarter, they made 300 million in free cash flow. So the question is this a more normal quarter, or is it this, or is it a stable of the both? I don't know. That's the issue. Now, the good news is this quarter ending in August was very similar to the quarter last year ending August from an income standpoint, not from a free cash flow standpoint. This is a doozy. This one makes me go, I don't know. They just started their dividend.
What you thinking, Paul? What you thinking?
I don't know what I'm thinking. This
You're
is a good
intrigued,
one,
though.
guys. This is a good one for doing more investigating on. Is Trader Mo in the chat?
You want to go to a new company, Paul?
Yeah, I think we do. I'm just asking Trader Mo what he thinks about it.
Okay, let's look up Franklin Templeton Investments, Paul. Ticker symbol is BEN, B-E-N.
That's Franklin Resources.
Yep.
I don't do resources.
Why is that?
Oh no, wait a second. No, time out. Franklin Templeton. This is Franklin Templeton Investment. I thought it was like a natural resources business.
Oh.
Okay. So guys, this is asset management. So I want everybody to understand this. There's a lot of asset managers that are selling at good prices. I like them. However, you got to keep in mind, if I believe stocks are overpriced, and if I think stocks are going to fall by a lot, their fees are going to fall by a lot. So the important part in these companies is to understand what percentage of their revenue is based off of assets under management versus what percent is just a fee that they charge. So Jeff says Ben is a dog. I don't know this is where you need to do more research, because if it's based off the fees that they off of assets managed, as number of assets managed goes down, what's going to happen to their revenue and profit? It's also going to go down. But we're going to be able to see a lot in their history because they've been probably public for a very, very long time. They have been. So we'll see how they did in, look at this market crash. This was 07 market crash. They went from 45 down to 15. You know what the crazy thing is, guys? They're at the same, they're only slightly higher than they were in 2009, and the market is 5 times larger. Why is that?
What are asset managers, Paul?
Asset managers are people who manage money.
That's
they
it.
They manage stocks and all that stuff.
Okay. You want to keep going on this?
Yeah, absolutely. Let me do this. I think this is getting close, guys, on this one. So market cap, $10 billion. If you want to buy it today, you're going to spend $10 billion. Look at this. Look at this dividend.
Wow, nice.
5%. This is a big dividend. So they're spending $500 million a year in a dividend to pay you back. PE ratio, check mark, 13.
Wow, we love that, Paul. Look at this.
Look at this. Just in December of 14, they were at $55 a share. That means their PE, assuming today's, either way, it's down a lot. Now their profit margin is a lot lower than I expected. I expected a healthier profit margin than this. So X on this one, but I don't remember what T. Rowe Price and Schwab and those guys have for profit margin. So that's something to look at. But so far, we're cool.
Let's do a. So the X is for profit margin. We want that at 10%. We're at 4 and some change. Let's do revenue growth over the past 5 years. This is pillar number 3, Paul. Revenue growth.
And can we comment on Jeff? Hey, Jeff, JP Morgan, Bank of America, and Citigroup are a completely different company than they have banking parts of them too, which is a totally different analysis. So I think that's comparing apples to oranges here. Franklin Resources does not do banking. So that's where I look at your comment going, I get it. They do asset management, but their big revenue is generated from the banking and the trading and the brokerage house. So
Okay.
revenue.
Go ahead, Paul.
Here's where their problem is. Look at the revenue growth in the last 5 years. 6.5, 6.3, 6.2, 5.6, 5.5. Decreasing revenue, guys. Very much decreasing revenue.
Decreasing revenue. Oh no, Paul.
Yeah, that's exactly it. This is not good. Look at 2013. Look at 2014. They had 8.4 billion in revenue. They're down to 5.5. You need to understand why that is. You need to go do your research saying, are they selling divisions off? What is going on? Are people just leaving them? Because if you look at their stock peaked in 14, and then the revenue started to fall. And what happened to the stock? It started to fall.
Mm-hmm.
Net income. Oh, wow. Look at this, guys.
Profit growth. Go ahead, Paul.
1.7, 1.7, 764, 1.2, 800. Definite X there too. Bad. Shares outstanding, check mark, 583 down to 492. So
shares are going down. This is pillar number 5. Go ahead, Paul.
We have a company right now that's losing revenue and profit is decreasing. This ain't a good combo. You need to understand why that's happening. If they're selling off divisions that they don't like, that's one thing. If it's because people are pulling assets, that's another thing. Can somebody go do some research on that real quick? I do a little Google search to see why that's happening. That'd be great. And hit the like button too, jerks. All right. Total current assets, $8 billion.
Sorry, Paul. I just had to yell at my. Sorry, Paul. I just had to yell at my kid. George Kirchanen's my 10-year-old, and he's the one that's telling everyone to hit the like button about every 5 seconds. So I'm calming him down. Sorry, everyone.
I just saw that. There you go.
Sorry, guys. He's sorry about that. He's very anxious and loves the channel. Go ahead, Paul. We're doing assets over liabilities. Current assets over current liabilities. Pillar number 6.
Current assets, $8 billion. Look at this. Current liabilities, 1.2, and total liabilities of 4.6. Massive check mark here. So they have $3.5 billion more than they need. And remember, guys, the company was $10 billion. So if this is the same way that we look at cash on hand, then you're actually paying $6.5 billion to this company, not 10.
This would make the PE ratio much better as well.
Yeah, much better. But the PE ratio was already good.
Mm-hmm.
Now, I don't know. Maybe I'm missing this because banks tend to have that. And I don't think this is a bank. Let me make sure this is not a bank. Yeah, financial services, asset management. It's not a bank. Okay. So far, that's really good, guys. It's a massive check mark for that. That's a really good check mark.
How about pillar number 7 is free cash flow growth. And Paul, before you get to this, guys, you're doing a great job. Guys and gals, make sure you're smashing that like button there. We really appreciate it. Paul, it's we were laughing if we ever got to a point where we could hardly handle the comments. Guys, I see everyone coming in, all the comments coming in. I have a list of 10 stock tickers people want to see, so we're going to try as hard as we can, guys, to get to some of the more interesting ones. So, Paul, keep going with free cash flow for what the hell company are we even doing, Paul? I just forgot.
Franklin Resources.
Franklin Resources. Okay, keep going, Paul. Keep going. Free cash flow.
So free cash flow. This is starting last year. Oh boy. Okay, so ready? So here's the deal, Seth. 2.2, 1.6, 1.05, 2.1, and 0. So divide that number with by 5.
By 5? Do it one more time, Paul. I'm sorry. People are all over just going crazy in the comments. Go ahead, Paul.
Don't pay attention to the people when
I know I'm trying. Listen, Paul, look at me. I'm trying to run a damn show, and Enrique says something like this. I have no damn clue what he's talking about. I mean, seriously, like, Enrique, you got to – Enrique, listen, I'm trying to host a damn show. You got to tell me what's up here. Paul, give me the numbers. Give me the numbers again. This is free cash flow growth. Go ahead, Paul.
Okay, it's 2.2, 1.6, 1.05, 2.1, and 0. So divide that whole adding by 5.
Okay. It's 1.4.
Yeah, this is okay, guys. Purely based on my numbers,
go on.
It's a buy. However,
come on, Paul.
Wait a second.
Okay,
they had 0 cash flow in the last year. We got to understand why that is. Why is that?
0.
Something happened. They had 3 quarters of really bad cash from operations. Look at this. They had 5. Oh my God, look at these bad quarters right here. Something happened here. What happened? So guys, this is a company you want to be cognizant of. If you want to buy some just to see what happens with it, I wouldn't be opposed to that. But I don't know why. Are they? I mean, something's so on my Excel sheet here. Let me share my Excel sheet with you guys, since and I'll explain what I'm doing here. So Seth, stop sharing, share screen, application, Excel sheet. You got that, Seth?
Yeah, you're sharing the Excel. Okay, give me a second, Paul. Here you go.
Okay. So
tell people what they're looking at real quick.
I know. I'm getting there, Seth. Jesus Christ.
Okay. Go
what I do here is their revenue is falling by 5% a year. I have to assume that's going to continue on. I'm assuming that 5% growth, that 5% decline every year is happening. I'm going to assume their income growth is also continuing on at that same pace. I'm going to assume that their gross profit growth is the same thing. Their profit margin right now, the 5-year average profit margin has been 20%. So if you saw right there, Seth, remember how I said before it was 4%? That was confusing.
Yes.
Look at previous years. It's been over 25% all this time. So guys, this is very, very, so I'm also putting in, I want to buy it where I can make 15% a year. If you look right here, it's currently selling for 20. My price range is 13 to 19. This wouldn't be bad if you believe Ben Franklin can at least stop the bleeding, or if they're going to continually fall for 5% a year in revenue. I think you're still going to be okay buying it dollar cost averaging down. I now, if you want a growth company, this is not your growth company unless you think that they're going to turn around somehow. You need to do more research, understanding why they've fallen. But it's actually selling for such a low price that it actually makes sense.
You're kidding, Paul.
If you think the bleeding is only going to be 5% a year for the rest of the time, why are they falling? Did anybody say why they're falling so much? Have we heard yet?
Jeff is saying that the Ben's a great example why you shouldn't look at dividend yield first.
Wait a second. They have the free cash flow to support it. That was 1 year of no free cash flow, but they have plenty in the bank. So Jeff's bringing a good point here. They had no free cash flow in the last year, right? But they had plenty. No, they did have, quarter. But look at the last quarter, guys. In the last quarter, they had 500 million of free cash flow. Their 1 quarter got them the number. There's something that happened here, guys. Their cash from operations plummeted for 6 quarters in a row. We don't know why. It went from 700 million down to 250, 190, lost 275, 32, 32, 109, 505. Are they out of the woodwork? We don't know yet. We'll want to see what happens for the September. When are they reporting September's numbers? Oh boy, Chinese site coming. Oh boy.
What happened, Paul?
Not a whole lot. Let me share my screen here. I got to do this. Stop sharing, share screen, application window, the Goog. Why is Franklin Resources revenue down? We'd have to do that. Why is so Yahoo Finance? Let's see what's going on here. Seth, talk about Patreon for me while I look.
Well, Paul, we still have a lot of requests. People want to. What is? Yeah.
Okay.
Go ahead.
So we'll stop this one. But the bottom line is, Franklin Resources might be something to. Let me look at the options. I might actually do options on this one. Let's see if there's any options that could be. So what I'm doing with options, guys, is I'm going to go buy myself. If I think they can rebound, but I don't want to deploy a lot of capital, I might buy myself options that allow me to go get the shares in the future at a higher price or a lower price. So let me see if they have any active options available. They do not. Oh, no, puts. That's why they don't have puts. Calls. Okay. Let's see here. All right, let's move on. This is a tough one, but I'm interested in this in this Franklin Resources one. This is one that if you believe they can turn around and get better, Franklin Temple, then this is pretty solid.
Paul, I have to address this. Andrew says, check out my wife and I's photography. Yeah, we are pretty damn good photographers. I appreciate that. SethandBeth.com. You can check us out there. So, Someone, Andrew. Now listen, Andrew Rice said that. That's very nice of you. Cameron asked about CVS and Walgreens. We talked about both, but Paul, I think people
I own Walgreens.
Oh, you do. That's right. I think people are very interested in this RTX, Paul. We've definitely got a lot of talk about it. I've written it down just a few times, and maybe Nordstrom's. Oh, now they're flying in. Now that I open up the floodgates, Paul, the comments are flying in. Do you want to look at RTX? What is that, Paul?
Raytheon.
Oh, Raytheon. We've done this before, right?
We've done this one. Remember I said I don't like the fact that it's all government, like basically all government contracts. And I don't remember what we said about it, but I don't think I was gung-ho about it. It hasn't made money. It's got like very inconsistent financials, I think.
Do you want to pull it up and show them real quick while you're already off of it?
It's already on there.
Oh, I'm sorry.
Yeah, share my screen.
There you go. Look at it. There you go.
All right. So it's last year it made 5.53 billion, but quarterly, look at the quarter numbers. It lost okay, not terrible. I mean, it lost a big number here. Why is that? They had a big write down right here. Other income and expenses. Did we look that up why that was? Probably, I think we heard why that was. If you believe that's a one-time occurrence, which it seems to be, this might add 3.4 billion to it. What's it worth? It's still expensive. It's still 25 times. Yeah, it's still expensive. Trailing 12 months. Let's see that. Yeah, it's still expensive, guys, but they have good revenue growth. If you see this, I don't know if they're making acquisitions, but yeah, it's not terrible. Number of shares outstanding is down.
I think people are saying, Paul, people are saying Raytheon just merged with another company, just bought a company.
And that might be the case. I mean, they have a lot of shares outstanding. They diluted their investors a little bit. I'm in between on this one. I'm not like excited and I'm not like upset. Let's look at the technicals of it. Oh, negative technicals right here. By the way, 200 versus 300, the better. We back tested this one. It's slightly better. It beats the market by about 1.2%. So we've kind of moved on to the 200 versus 300. Get your pocket of stuff. So remember, 200-day moving average versus a 300-day moving average. When the 200-day goes above the 300-day, that's a buy signal. If you do it exactly this way and do it on all your investments, you tend to beat the market over long periods of time. We back tested it to 2000 on a handful of 75 stocks. And with 20% cash position on average, we were able to beat the market by 1.2% a year with a large cash position. So, but you have to stay very diligent about this. So you'd have bought here at 68 and you just sold here at 65. You'd actually lost money after seeing it go up and then collapse. So these are the risks involved. It's about 50-50 in terms of successful trade versus unsuccessful trade.
Some of our great fans, Just Me, I see you there. Put in Just Me one more time. What we were looking to look at. We certainly have some time. Just Me, I love you. Paul, people are asking about Leg. This is Leggett and Platt. Do you know about this company? L-E-G? L-E-G, yeah.
I don't know what they are. What are they?
It's
furnishings.
Missouri-based designs and produces engineered components and products found in homes and automobiles.
Okay. Retail stores, commercial aircraft. Let's take a look at it. All right, guys. $5.5 billion company. First off the dribble, 25 PE. So automatically an X. Again, that doesn't tell us anything specific right now about it. 9% profit margin. Another X. Not terrible. I figured furniture would probably be... The thing that's interesting is I would have thought furniture would have a higher gross margin. But either way, 9% bottom line profit. Dividend of 3.8%.
Not bad, right?
On 5.6 billion. They're paying around $175 million or so. Am I doing that math right? Somebody tell me if I'm doing that math right. Let's see here. Calculate 5674 times 0.0376. $220 million. My math was way off. $220 million in so we have two X's so far. Let's go look at the revenue.
Real quick, Paul. Paul, Zachary asked, are we ever going to talk about real estate? Zachary, if you want to get in the Patreon, Paul will talk to you about real estate till the cows come home. He's been dying to talk about it, but when we do sort of slower podcast discussions about real estate, our viewership goes down because the barrier of entry and getting into your first rental property is very difficult, as opposed to just firing up Fidelity or Schwab and buying some stocks. So the Discord will be filled with real estate. And Paul, that's really your specialty, wouldn't you say? I mean, you're more of a real estate mogul than anything else. So
Disagree.
Okay, keep going. Great, I love you. Revenue growth.
I said disagree.
I know. That's why I just like look past it. You're great. Revenue growth over the past 5 years, Paul.
3.9, 3.75, 3.9, 4.3, 4.75. Check mark there, my friends. 98 million. Sorry, 325 million, 358 million, 385 million, 300 million, 300 million, 333. Check mark there as well. Not much growth though. Went from 325 million in profit to 333.
Pillar number 5 is okay. Pillar number 5 is shares outstanding. We want the number of shares going down, Paul. How are they doing?
141 to 135. Check mark there.
Very good.
So far not bad. 2 X's and 3 check marks.
Okay, how about pillar number 6 is current assets greater than current liabilities?
Current assets, total current assets, 1.5 billion. Total current liabilities, 950 million. So a definite check mark there.
Very nice. How about free cash flow growth? The granddaddy of them all, pillar number 7, free cash flow growth.
So remember, everybody, free cash flow is operating cash from operations less capital expenditures. The capital expenditures come in as a negative number, so you're just adding the two numbers, or you're subtracting the absolute value, the positive number of capital expenditures, the bottom line. So, Seth, you ready?
I'm ready.
260, 430, 280, 280, 520.
The average is 354.
So first off, it's a check mark for growth, and the average 354 times 20 is 7 billion. They're at 5.7 billion. So
hold on a minute.
Might be. What do you say? Hold on a minute.
No, I'm saying I'm really listening now. Keep going.
So it's selling for less than 20 times free cash flow. The question is, do they have the growth to justify 20 times? But at 15 times, it's still okay, I think. What was the free cash flow average?
354.
Yeah, so what's that times 15? That's about 5 billion. Guys, from a percentage and then high for return on equity, this isn't terrible. What's their product like? They have good products.
Oh, here you are, Leggett and Platt. Look at this.
It's a terrible website.
It looks very, look at that.
What do they do? Oh, look at their 10K right here, kids. Go read that. Have fun.
Oh, my God, Paul. Who's going to read that?
But that's the whole point. That's what investing is. Business segments. Bedding products, furniture, specialized products. All right. So small company, $5.5 billion. This is pretty interesting, though. Maybe it's let me put it in my trusty Excel sheet and see what it says. All right, let's go to.
While Paul's diddling around, make sure guys we're smashing the like. It's very incredible. Paul's been working very hard. Both of us have to get this done, and you don't have to pay us anything. Just hit that like and subscribe, and YouTube will pay us. Paul, did you pull it up yet?
Well, I think from a long-term perspective, it's very close to being at fair value. But remember, I'm a value investor. I want to buy something well below fair value. So from that perspective, if you just want to get a 10% return, wait till $36 to $38 and you'll be fine. I mean, it was at freaking 26 here very recently. I should have been buyer at this thing early on. Like I did Steelcase, and I bought Steelcase and what's that other chair company? Begins with an M. Forget. I bought them, and it's done very well because I bought them when everybody thought nobody was going to buy office furniture anymore and nobody's going to buy furniture, etc. So this is for home. This is probably going to be less business affected than others. So I look at it saying, this isn't terrible. Now, if you want to make a good amount of money, you got to wait until it's sub 30. But if you want to make what it's like 10% return, yeah, high 30s, I think you're going to do pretty well. And they said they paid a dividend, right? We said they paid a dividend. Now, they eat up a lot of their free cash flow with the dividend, but they had a good, let's see how they did this year so far. Let's do the quarterly numbers. 1.2. Okay, not terrible. They're rebounding nicely. Did they lose money? Oh, they barely even lost money. Guys, look at that. That's pretty solid. They barely lost money in the second quarter of this year. Barely lost money. Do it through COVID. I like that. Not bad.
Paul,
so I think it's expensive for my taste in terms of I want to make really big money. I'm willing to wait. But if you just want to make 10%, just wait for it to drop 10 more percent. I think you're going to be there. I think that as long as they keep their revenue growth growing at its low single digits, I think you'll be fine.
Paul, can we look up? Do you want to look up an Indian company, Moot Hoot Finance?
Zoot Suit Riot? What?
Moot Hoot Finance.
How do you what's the ticker? How do you spell it?
Traded as BSE or NSE?
What? I got nothing.
One of our dear fans is saying BSE, Bombay Stock. Oh, no, I'm sorry. No, that's not right. It's an Indian company. Sorry, guys, I didn't know that. Paul, what about Moot Hoot Finance share? Just me is saying. Do we know what that is?
Zoot Suit. I think I don't know what. Move on.
Okay. Well, just me. We can get to you. We can get to Indian company. Pradesh is saying.
Moot Hoot. Wait a second. Moot Hoot. Nope, it's not popping up.
Okay, let's do BKNG. What is that? BKNG.
Bookings. It's what's it called? Look at all their things they own. Priceline, Booking.com, Agoda, OpenTable, RentalCars.com.
Wow. Holy cow.
Yeah. So they're pretty big here. So $83 billion company, if you want to buy all the entire company in full. PE ratio, what is that number there, Sethy?
61, 3 times what we want.
Yeah, very high. Profit margin.
Now that's nice, Paul. You got to like that.
That's
profit margin of 30%.
Yeah, it makes sense. They're a website business. I mean, they're going to have a very high profit margin in the bottom line. So I love that. So an X on the PE ratio, a check on the profit margin.
How about revenue growth over the past 5 years? This is pillar number 3, Paul.
Revenue growth of ready? 9.2, 10.7, 12.7, 14.5, 15. Definite revenue growth, slowing revenue growth, but definitely revenue growth check mark.
How about profit growth over the past 4 years? I would assume it'd be the same. Wouldn't you agree?
2.5, 2.1, 2.3, 4, 4.9. Awesome.
Number of shares outstanding is pillar number 5. Number of shares outstanding. We want this going down, Paul.
51 to 43. Check mark there too.
Very nice. Let's do pillar number 6 is current assets greater than current liabilities, Paul.
12.6 billion in total current assets and 3.94 billion in current liabilities. Check mark.
Wow.
Awesome. Great job.
So we're only down on the triple PE at 60. That's our only check so far, Paul. How about
I'm sure price to free cash flow will probably be the same. So let's look at that.
Okay, free cash flow growth over the past 5 years. Pillar number 7.
All right, you ready for the numbers?
Now, what I would say, Paul, is we have not had someone smash the like button in like 20 minutes. So if someone can go down there and just tickle that thumbs up, that would be incredible. We love you guys. Keep going, Paul.
You ready for the numbers? Look at this, guys. Very, very low capital expenditures to cash from operations. That's awesome. So as they build their brand and they become more of a go-to site like Google, things like that, they're gonna really generate a lot more cash to their cash flow number. This is really awesome. It takes very, very little money for this company to continue going. They're about protecting their brand. Obviously, a concern I have for the company like this is Google, but Google would have done that by now. I don't ever use Google Travel. Anyways, you ready for the numbers, Seth?
I'm ready. Go ahead.
3 billion, 3.7 billion.
Wow.
4.4 billion, 4.8 billion, 4.5 billion.
Wow, Paul. It's basically 20.
So divide by 5.
4 billion, right?
Yep. So times 20 is 80 billion. Guys, this is crazy. It's not far off. Why is that? It's because of the growth. Are you sure you did that right?
I mean, yeah, the numbers were all pretty much the same there, Paul. I mean, you were saying 4s and 5s. I did the numbers. I'm pretty sure.
Yeah. I don't know what's going on here. It wasn't 4s and 5s, but it was close. It was some 3s in there. Are you sure? Let's see here.
Do it again.
All right. I must have given you the wrong number. 3 billion.
Yeah.
3.6 billion. 3.7 billion.
Mm-hmm.
Yeah, you're right. 4.4 billion. 4.9 billion and 4.5 billion.
Okay. Divided by 5 is I'm sorry, it's 4. It's 4 billion, Paul. It's just 4.08. Okay.
You said that. I mean, guys, from a free cash flow perspective, times 20, I mean, that's good. But the issue we have is, man, this is selling for a big chunk of a big multiple of PE. I don't know what is going on. What's making it so weird? Their growth is really slowed, though. Their growth is bad. Oh, you know what it is? You know what it is, guys? I'm sorry. This is what it is. The trailing 12 months. That's why the PE is so high. You ready? Look at their quarterly numbers. It plummeted. They went from making basically 700 million to a billion every quarter to losing 500 some million in 2 quarters. So that's why the PE is skewed. That's why the PE is skewed. And that's what's wrong with the Excel sheet. The Excel sheet told me the same thing. So stabilized, they did last year. This might not be terrible, guys. Their revenue growth has slowed quite a bit. Man, look at this. Look at this jump. $1,100. You know why with $1,100 though, right? Everybody's like, no, travel's not going to happen anymore.
Mm-hmm.
Man, this is an interesting one, guys. I'd keep my eyes on this one. I would keep my eyes on this one. It's on the negative right now for momentum. The blue line's the 200-day, the orange line's the 300-day, and it's crossed below. It is on the negative for momentum, but it's just jumped up here, so it's just a matter of time. This is called a gap. Man, this is an interesting one, guys. Bookingholdings.com. This is an interesting one. Let me talk to Mo here. I want to talk to Mo and tell Mo we need to read like the 10K, I think.
Paul's mentioning Trader Mo, our day trader specialist. He'll be on the show, and he's getting his own channel very soon. Paul, what do you think about this? Do you want to move on?
Well, it's 2:30 right now.
Of course it is. Guys, I'm sorry we could not get to everything, Paul. We could literally do videos on like all of these stocks. We probably should. These are what people are asking about. Guys, we can't thank you enough. Yeah, we normally go an hour. It's been an hour and a half. You guys are awesome, and we can't thank you enough for your support. We go live twice a week, Tuesdays and Thursdays at 1 p.m. Eastern, American time, of course, and we bring you content every single day as well. Paul, thanks for the great show. Final thoughts before the weekend hits with COVID and investing, and what do you think?
Guys, for $8 a month, you can get our app forever for $8 a month. Go to Patreon, sign up. It'll be the app for $8 a month because when it comes out, it's going to be every bit of $15 to $25 a month and probably go higher as I add more. So do you want it for $8 a month, basically forever? Or do you want it for $15 to $25 a month? You decide. And if you can't do the $8 a month to get yourself major financial help and all access to my Y charts essentially for free, you're crazy. It's $8 a month. It's 2 cups of coffee. Go to Patreon right now. Patreon, I'm going to put the thing in there right now. Sign up for at least the $8 one. You're crazy if you don't. It helps Seth. It helps Don. Helps me, of course. But at the same point, it's going to help you a ton. You're going to get access to all my trades, all my everything. I'm going to talk about everything. It's going to become my new life, is living off of showing you guys what I do. Don't be stupid. Don't be financially dumb.
Guys, that was incredible, Paul.
All right, guys. Thanks very much.
See you guys. We'll see you guys soon. Have a great day. Bye. See you guys.